and it's been a good onset for the monsoon in the southern part of India, western as well, and there has been those reports of rains coming in for other parts of the country as well. Looking at that, if you look at the agriculture prices, you've seen a good gain up coming in for the edible oil prices because of the weakening rupee as well. The import cost tends to go up. So you have seen the soybean, soy oil, mustard and all of those prices on the higher side, but there has been a bit of a decline in pulses and in case of sugar prices as well in the intraday market today. Also joining us now is Ajay Kedia, live in the show. Ajay, hi, welcome. How would you look at the pulses prices right now? Because we've seen a bit of a decline continue. Intraday prices were 1.5% on the lower side as well. How are you trading it?
Good evening, Maisa. As we have seen that from 1st of June, monsoon has progressed very well. In pulses, we expect that further fall can be seen, especially in China. Already we have seen that some monsoon demand was previously helped China to gain around 3,300 roundabout. But overall, we expect that prices should come down and cool down around 3,050 in near term. Last year, we have seen the production is quite high and demand as of now is slightly low. So we expect that further fall can be seen in China prices.
All right, 1% down is where it shut sharp today. But let's get in more on monsoons. And the Indian Meteorological Department has said that the India has received 11% above average since June 1st. It's also stated that monsoon is advancing towards India's main cotton and soybean regions. Maharashtra and Karnataka will receive heavy rains this year is also something that the IMD seems to be reporting in the day today. Looking at that kind of a view, Vijay, how would you look at the pulses and the rice, cotton, all of that belt coming in?
Manisha, pulses are something that I remain bullish on. The initial reports of the monsoons are definitely a welcome sign. But we do tend to be dependent on imports to a certain degree on our pulses requirements, and I don't see how that will change. So if I was to look at an example of, say, chana, I would remain of the view that one should not even look at the prompt month futures. I would be iffy about looking at anything earlier than August, if not September. Now, August has closed at 3,256 levels. If I was to get August at 3,200 levels, I don't really mind sticking my neck out and start accumulating chana in the August futures. If I was to conversely get September at sub 3,300 levels, I would prefer September because I'm getting a longer time frame to basically add on to my holdings in chana. I am quite open to the fact that after I buy, there would be certain amounts of declines. And decline to the extent of maybe 100, 150 rupees is something that I would take it in my stride and merely enhance my exposure on this counter. Where August is concerned, I'm expecting 3,500 plus. Where September is concerned, I think it would go to 3,575 levels in the tenure of that contract.
Also, the other thing that really is very strongly related to monsoon is guar. How would you want to trade that, Ajay? What kind of a price movement have you seen since its inception, and what kind of a range are you now predicting?
See, Manisha, as guar is relaunched on future market, we have seen market was turned around from 10,400 level. Continuously, we are expecting that prices should fall further, and maybe we can see prices coming below 5,000 level in near term, as fundamentals are still very much bearish on in case of guar seed. Already the carryover stock are quite high, and this year a good monsoon has created a pressure on sowing can be increased because of that pressure can be continued. Maybe because last week we have seen some hike in the margin prices that could support the prices, but overall we expect that by July end we can see prices well trading below 5,000 level.
Vijay, how about the sugar prices? Because today has been a weak day yet again for that one too.
Manisha, my view remains unchanged. I think the markets are celebrating the rainfall, and there is an expectation that good rainfall will automatically translate into higher cane output. Let's also not forget that come October crushing season 2013, the FRPs are slated to go up sharply. You also have a situation where crude oil prices, I'm talking of fossil fuel crude prices, not CPO, which are firm in the international commodity markets, and the rupee dollar parity will mean that at some point in time fuel prices at the pump level need to go up, which will add on to the production cost of sugarcane. I think financial futures still remain under discounting the long-term contracts of September and October sugar on the NCDX. I still think they're a good buy for a patient trader who's willing to dig his heels in and fund the position.
Fair point there. Let's also get a word in going from Mr. D.S. Pai, he's Director Long Range Forecast, IMD, and he joins us on a phone line. Mr. Pai, hi, thank you so much for joining us. What's your sense now on the monsoons? Because it has seen an early onset and we have seen an above average rainfall coming in for India till time.
After onset over Kerala on 1st June, which is the normal date for Kerala, the progress of the monsoon till now has been very satisfactory. It has gone like a textbook mode, and as of now, it has covered most of the southern states like Kerala, Karnataka, Andhra Pradesh, and Orissa. It has covered Maharashtra today, and a large part of the Gujarat, southern part of Madhya Pradesh, and most of these regions are actually paddy cultivation areas, and rainfall has been good. And importantly, this area had been faced a deficiency of rainfall last year. So that way, so far, monsoon progress has been very satisfactory.
Sure. Mr. Pai, it clearly has brought cheer around because of the kind of monsoon or the rainfall that we have seen, at least in Maharashtra. And as per your reports, Maharashtra and Karnataka will receive heavy rains as well. But where do you see concerns coming in for some states, really?
See, actually, I should not say concern. But now some deficiencies were mainly in the northeastern part. But however, this region had got good rainfall prior to monsoon, that is during the pre-monsoon. So though there is a deficiency of rain last 1 week over that region, so far we cannot say it is a concern.
All right, Mr. Pai, well, your point is well taken. Thank you so much for joining us. So that's the view really coming in from IMD. As of now, the onset for the monsoon has been early, and you have seen above average rainfall coming in for most parts of India as well. Let's take a look at how the gold and silver prices are trading at this point in time. We started the Asian markets on a higher note, but there have been concerns about the US QE, and of course, the strong US dollar has been putting pressure as well. On your screens, very flat trades coming in for gold, and ditto is the case with silver. And we have seen decline coming in for the energy prices. On your screen, 0.5% down coming in for the Brent crude prices. It really has to do with the base metal prices, which have declined much sharper than the other commodities. 1% and more of a cut coming in for all of that space. Ajay, what's your sense coming in for bullion now? Because the kind of choppiness that we have seen in the international markets and the rupee depreciation cushioning the kind of fall there, how are you reading the levels?
On Friday, after the job data, we have seen continuously fall in international prices. Before that, also last week, 1390 was a very good support in international market. As soon as we have seen that prices has fallen below 1390, immediately there was a good sell-off. Similarly, we are expecting this week also the prices in international terms may test around 1356, 1354 level. While on domestic market, rupee was a very much crucial part. Today, we have seen almost 2% drop in rupee that has continuously supporting domestic prices. But overall, the sentiments are still weak. We expect that prices should be in a choppy range of 28,000 on domestic market on higher side, whereas downside we can see once again around 27,250 level.
Vijay, what's your sense now coming in for the base metal prices? Because today has been a bearish day. The Chinese markets were shut, but after the European markets opened, we saw very sharp declines coming in there.
You're right, Manisha. What you are seeing is somewhat of an artificial to the sense that the decline in the rupee by almost 2% has seen a less than commensurate bullishness in almost all industrial metals. If at all the rupee was to appreciate in a corrective kind of a pullback, I think, and the overseas prices remaining constant, I would expect some of these gains, if not most of these gains, to get reversed. So you are in a catch-22 situation where the price on your screen does seem bullish, but the underlying reason for the bullishness is not because of any fundamental or technical reason, but because it's a rupee factor, which is trading on very, very thin ice, if you ask me, and building long positions. I would prefer to sit on the fence and watch the prices rather than take a risk.
That is the case with the crude as well. We started positive and then we've turned around completely. Ajay, how are you trading it in the markets now?
See, crude in international market last week we have seen a very sharp fall, and again we have seen a very good recovery. Currently market seems to be trading in a very choppy range of 54.50 in lower side, and maybe we can see a bounce around $98 despite of whatever the manufacturing data from update we have seen from the China. Also it is slightly bearish, but domestically we expect that prices should be one can take a long position around 55.20. Maybe we can see a jump around 5600 level because of rupee factor. Otherwise overall scenario seems to be very choppy for this next two session.